Hey, hello investors, welcome to the channel. For today's video, I'm going to show you how to buy stocks in order to use them for options. I'm going to give you a step-by-step walkthrough of the criteria that I use in my portfolio in order to acquire these stocks and use them in order to sell options. Now, if you're trying to get into options in order for you to make a little bit of extra money, or you in fact are new to options, then you stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be walking you through a step-by-step process of the analysis I use in order to decide whether I'm going to buy stocks in order to use them to sell options and keep making consistent income over time. Now, you too can learn all these strategies, so make sure you tune in. Now, on this channel, we like to do one thing, and that is to get down and dirty with options. The only true way for you to learn options is for you to practice, practice, practice. That being said, for today's video, we're going to be using one of my favorite stocks that I have not traded in a very long time, and that's going to be Trade Desk, ticker TTD. Now, in order to keep these analysis extremely simple, we're going to stick to all the tools and utensils Robinhood has to offer. So that way you don't have to go outside of Robinhood in order for you to make a decisive decision. Now, this should not take you more than 15 minutes. So here goes. So first thing you want to do is see how the stock has been performing over the years, and you can get that done by going to the charts down in the bottom. So 1W is going to reflect 1 week, 1M is going to reflect 1 month, 3M is going to determine 3 months. You have your year, and lastly, you have your 5-year outlook. We're going to come back to these outlook a bit later on in the video. Now let's go ahead and scroll down. So let's say this is a random stock that you've never seen before. You just heard on YouTube. So you want to do some basic analysis. So this is what you do. You're going to go ahead and you're going to go down and you're going to just read up just a bit of information on the company. So at least you know something about the company. Now, of integral importance is this right here. This tells me that my margin maintenance is going to be 25%. For those of you who don't know what margin is, it's just extra money these brokers give you in order for you to trade with. Margin needs to be used with responsibility. Now, as you can see here, my buying power for TTD is going to be $3,100. Now, the margin is 25%, which tells you that they think this stock is not very risky. But I beg to differ. Now, just as context, let me jump into another stock and I could show you the margin maintenance. So let's go to QBTS. Here we are on QBTS, better known as D-Wave, and let's go down so I could just give you a comparison. So as you can see here, the margin has drastically increased and my buying power has drastically decreased. Now, for those of you new to options and you don't know how this works, if your margin maintenance is at 60%, that means they're only going to give you 40% of the amount of liquid cash you have in your portfolio in order to purchase margin. So if you're going to divide 1294 divided by the total amount I have in the portfolio, which is $3,100, you're going to get around 40%. And that's just a quick basic calculation. So let's go ahead and get back to our stock for today, which is going to be TTD. Okay, so just continuing with a basic analysis on TTD. If you go down, you're going to see almost everything you need for the company. The 52-week high is 141. The 52-week low is $71. Now, right here, you can see that is a huge gap. Now, if you don't understand this, then you need to do more research. As an option trader, when you see this, you literally start to salivate because this huge gap tells you that this stock is going to be paying some decent premium. Let's go ahead and keep going down. So right here, you're going to see any news about the company. And down here, Robinhood makes this very interesting. Now, I did make a video about how to read all of this, so I'm not going to go into detail. I'm just going to give you a quick snapshot. So if we go all the way down to the end here, you're going to see this is February 21st. This is actually Friday when we had that market pullback. Now, it shows that Robinhood retail investors bought this stock a lot on Friday. Now, let's go over quickly to hedge funds. Now, in the hedge fund category, you're going to see here, they bought in the fourth quarter. We see to the top Q4 buying the stock. Now, let's go to the insiders. Over here, the insiders, you can see the insiders are still buying. So overall, It seems like everyone is buying this stock. Go figure. Okay, let's keep going down. Something else of integral importance is your analyst ratings. So what it tells you here, the overall rating for this stock is a buy. So of 39 analysts, 69% of them are telling you that this is a buy. Now, all this information you're gathering is going to help you make an informed decision whether you want to get into this stock or not, or whichever stock that's on your radar. Now, right below that, you're going to see the bulls and the bears. And this is basically an argument put forward by both sides, and they share their opinion, and then you decide whether you want to go the bullish way or the bearish way. Now let's keep scrolling down, and then you're going to see the Bleacher Report. Now this one is very, very important as well. Let's start to the top. Now right here, this gives you an estimate of the fair value of the stock. This tells you what the stock should be trading for. Currently, the stock is trading for around $71, I believe. So the stock is trading below the fair value. Another bullish sign. Let's go down a bit further. And right here, every single stock you want to get into, always make sure you check to see what the earnings date is. If you're new to options, I suggest you don't trade during earnings. If you are new to options, then you know how this is a perfect time when volatility is high. This is when we make the majority of our money. Now, if we were to go down, you guys will see I have been trading this stock for quite a while, and I did trade this stock between the $70 level and the $80 level. Let me just see if I can pick it up right here. Yes, right here, between $70 and $80 level. Now, whenever this stock went above the $80 mark, I stopped trading the stock for options because I do not chase. Now, this was in 2021. Now, 2025, the stock is back down. When trading options or investing in the stock market, you always need to have that patience. So let's go ahead and we're gonna go back. Okay, so that was a simple basic analysis if you're beginning to stock options. That just helps you make an informed decision. Now we're gonna go ahead and we're gonna get just a bit technical. So we're gonna go ahead and go to the Robinhood Advanced feature right here. We're going to open that up. Now, I did mention I'm going to go back into these right here, but let's do that in just a few seconds. Of real importance is your indicators to the side here. You have your price, you have your MA 200, which represents the 200-day moving average, and you have your RSI, which is your relative strength index. Now, I did make a video about your RSI, also your moving average, so feel free to check that out if you want to. Now, the MA 200 is highlighted in blue. Your RSI is highlighted in just a light color orange. Now, each of these can be changed. So you could go into settings and you could change it based on your own personal preference. So first thing we're going to do, we're going to go over to the 1 week once again, and we're just going to do a basic analysis of how we think this stock is doing. So if you follow the blue line, you could see that this stock has been trading around $75 over the last 6 months or 200 days. Currently, if you go right below that, you can see that currently the stock price is trading below the moving average of 200 days. So in my mind, that's also a bullish signal for me. I like to get into stocks that's trading below the 200-day moving average. Now, if we were to go down just a bit further, and we're going to follow the RSI, which is this right here, you go almost to the end, you're going to see the RSI on this is 31, meaning this stock has been oversold. So for me, and based on my personal preference, these are all bullish signs for me. So remember, before getting into options, always make sure you do your own due diligence. And even more important, always make sure you have an exit strategy before entering any options contract. So these are 3 bullet signs for me, but don't get too excited as yet. This is just the 1 week outlook. Now we're going to go over into the month outlook and see if this is still the same. And this here should worry you. This is a huge gap. So like I said, always do your own due diligence. Make sure you know what the reason that this has happened. So continuing, the price once again is still below the 200-day moving average for the 1 month period. And the RSI is still really, really nice. So once again, I'm still bullish on this stock. I'm going to go out now to the 1 year period. And there you have it once again. The price is once again still trading below the 200-day moving average, and my RSI is in heaven's territory. Now, I did make a video about the RSI, how it could be used as an indicator in order for you to make a decision, but we do not buy when the stock is down here. We buy when the stock shows clear signs that it's going to go up. Now that I have this information, what am I going to do with it? Well, first of all, this stock is going to move to the top of my watch list, and I'm going to continue to monitor it. Now there's three strategies I'm going to use on this stock once it hits my pricing points and my alerts. The number one thing I would do is that I would pick up 100 shares right away in order for me to start selling options. The reason why I'm going to pick up only 100 shares is that I do not know whether the stock is going to go up or whether the stock is going to continue going down. So I'm only going to pick up 100 shares in order for me to do one contract, so I'm not fully exposed. Okay. The next thing I'm going to do with this stock in order to get it into my portfolio to sell options is that I'm going to DCA into the stock, which is dollar cost average. Dollar cost average means you keep buying the stock, whether it's going up or it's going down, you just keep buying the stock over time. What this does is that it makes your average cost of the stock at a more affordable value. So this helps minimize your exposure. Now, the third strategy I would use for this stock, which is one of my best strategies in my portfolio and has helped my portfolio grow over the years, is going to be picking up a couple of LEAPS options. Now, LEAP stands for Long-Term Equity Anticipation Securities. Once again, I would not pick up a LEAPS option right now. I would use all my indicators, my 200 moving average, my RSI. I will wait until the stock shows clear signs that's going up. Then I'll go ahead and pick up the LEAPS option. Now, once I have the LEAPS option in my portfolio, how am I going to use it in order to make consistent income? Well, that's what I do on this channel. We take small account portfolios, and we show them how to use these option strategies in order to make money. So once you acquire 100 shares in your portfolio, either by DCA, by buying the stock outright, or by using a LEAPS option, then you're going to turn around and sell covered calls. So this is just a brief description of how you do the covered calls. We're going to go to sell, and then I'm going to look to choose my strike price above the current share price. Now, based on my trading preferences, I'm just going to give you a quick walkthrough of how I think before choosing my strike price. So right away, I will see the $75 strike price, which is good. As you guys know, I love a chance of profitability of around 80% or higher. Now, this is 78%, which is not bad. Now I'm going to go see the amount of premium I'm going to be receiving. So the premium I'm going to be receiving is going to be 0.75. Now, 0.75 is going to be equal to $75. As you well know, each option contract contains 100 shares. So 0.75 multiplied by 100 is going to give you $75. So on a weekly basis, you will be able to make $75. Now, if you guys are not new to the channel, you guys will realize I always say don't focus much on the nominal value. Always look at the percentage gain. What I'm going to do is that I'm going to try to make between 1 to 3% on a regular basis, and I'm going to choose my strike price and my chance of profitability as high as possible in order for me to keep the stock in my portfolio as long as I possibly can. That being said, I would not go with a $75 strike price at the February 28th expiration. I think that's too short of a time. So what I'm going to do, I'm going to go out just a couple more days, and that's going to give me March 7th. So which the March 7th once again. Now I'm going to start from the $75 level, and I'm going to start looking upwards. So the $77 strike price hits my eye. It hits my criteria for chance of profitability is above 80%, and now it's paying me $87. Once again, you're going to multiply your 87 cents here by 100. Now, if you were to divide $87 divided by your share price of 7,175, you will get a percentage return of around 1.2%. In my book, that's extremely good. Now, that 1.2% you're going to be getting is going to be based off of if you buy the stock outright, you buy 100 shares. Now, if you were to employ the DCA strategy or you were to buy a LEAPS option, then your rate of return is going to be much higher than 1.2%. So when making a decision of how to acquire a stock into your portfolio in order to sell option, the strategy you're going to use to acquire that stock is very, very important. Now, you can continue doing this over and over again until you assign the stock. Assign just means is that 1 week when you trade in the stock, the share price right here is going to go higher than whatever strike price you choose, and you're going to lose your shares. Now, because you lose your shares is not such a bad thing because remember, you continue making consistent income as time goes by. Now that you And now that your strike price is hit, you're going to get what's called stock appreciation, which is going to be the difference in what you paid to acquire or control 100 shares and the price you sold it at. For this instance, it's going to be 77 minus, let's round it up to 72, and that's going to be $5. Your $5 you multiply by 100 shares, and that's $500. So there you go. You could make $500 in a month on this, or you can continue making around $87 every 2 weeks. The choice is yours. This is just one of the analysis I use, just using Robinhood only in order to make a decision of which stocks I want to buy to add to my portfolio in order to continue making consistent income. Now, if you received any value from this video or you have any questions about this strategy or any of the strategies we feature on this channel, feel free to go ahead and leave me a comment below. Now, go ahead, like the video, subscribe to the channel, which means a lot to us. But most importantly, if there's anyone out there that's struggling to grow a small options portfolio, then feel free to share this video with them. Let's help as many as we can. Until the next video, keep pushing your investments.